Alright traders, welcome back to the channel. It's been a while I've actually made any video, and it is simply because I was allowing you guys to digest all the content I've already given you guys. But then I'm back because I've received so many messages from you guys. So in today's video, we'll be looking at one significant aspect of trading, and it's about the mistake that a lot of traders make when it comes to taking an entry. Now, the consummation of everything is to find the best entry possible. If you can't spot the best entry, you will end up making a lot of mistakes. And newbies make this simple mistake most of the time. And that is why I have to show you why you are getting stopped out most of the time when you are in a trade. Now, let me start by sketching a simple diagram and show you how it works. All right, let me go to the sketching platform here. If I have a price action like this, let's say I have a very simple price action, price is doing something like this, and boom, I have price do something like this. Very powerful. We can call this a break of structure, right? That is a BOS. And what does break of structure tells us? It simply tells us that price has a potential of moving in that direction subsequently. Now, if you are looking for a simple way to do price range in this particular price action, this is just a basic market structure. You can pick your fib level and put it here to the point where price will start retracing, specifically retracing. Now, there is a rule of thumb. If I have at least 3 candles that are showing interest to go down, it means I have created a high. That is where my fib level should be. So if I have this, now most traders will prepare to start entering the trade immediately when they see price retracing. Now, there are 3 things here that you need to pay attention to. You have the premium side, the equilibrium, and the discount. These are the things that you need to pay attention to, paid in a bullish movement. We call it paid. Premium, equilibrium, and discount. These are the 3 most important things to deal with. Now, in this entire equation, you will be making a very, very big mistake when you start considering any entry around P. Alright, so take out P in your equation every time you want to go bullish on a particular trade. If you have a price range, take out P out of your equation. I hope you understand that. So that means in this entire equation, I will be focusing on here, just here. Can you see this sketched area? I will take out this guy and have my focus just here. Half of this entire price level is called equilibrium. So at the end of the day, I will be left with what? With E and D. So taking out P out of the equation. Taking out P out of the equation because I am dealing with a bullish scenario. That means price is expected to go bullish. So the next thing to also focus on is how price is going to finally come down to the discount area. Now there are moments you will see point of interest. Most of you trade with either an order block, a fair value gap, a mitigation block, a breaker block, whatever point of interest you're using. If you arrange them according to the PD-ARRAY, you will probably see a bullish order block here for you to see. So we have this guy, or let me have it like that. Here, perfectly. You probably see a fair value gap close to it here. And the same time, you're going to see either this one. Can you see this guy? This guy is actually a bullish mitigation block. Let me make it more easier for you to see. Right here is a very significant point of interest also. You have a fair value gap. Perhaps you may even see another fair value gap here. All right. You may either see another fair value gap. So you have so many institutional reference points there, and your eyes is fixed on them. You see, you have your eyes here, you have your eyes here, you have your eyes here. Your eyes is fixed on them because they are called point of interest. This is where we want to take our trade. Point of interest. So as price begins to come back to to your point of interest, it will start by giving you something like this. Something like this. Now, to most traders, the moment they see price do something like this, they take their trade. Because they don't have that level of patience to wait for price to mature. It's about maturity of price now. I use the word maturity because most traders cannot stay patient. It's about maturity of the trade. Trade will reach a level that it will mature fully and you will take the best entry possible. All right. But you have to mix patience and discipline to be able to achieve that. And then only for them to be in haste to take the trade, happily waiting for price to reach their target. Especially newbies. They have been in this loop. You are targeting somewhere. Some people target some kind of hilarious price level. And then price will surprise them. And what? Come down to the point of interest. Now, here comes the money. You now see what happened. You now see the mistake. Here comes the mistake. You become a money in the pockets of the informed traders. Your stop loss is an additional money for them. I don't want to go into the system of showing you what it means, like where your stop loss is, because your stop loss is simply a cheaper price level for them to give you their money or to buy from you. So they take out your money because that area is money resting. Your stop loss is money for them. Money. So this is the mistake I want you to avoid. All right. I will show you typical examples of what happens. Most of the time when you are too quick to take that trade, some people call it inducement, some people call it manipulation, whatever word you want to call it, but it's a simple mistake that a lot of traders make. Then the people that finally took it from here make the money because they have done their assignment. They allow price to mature, All right. So here is a typical example of what I'm showing you. Let me show you. Can you see this price action? Right here at this moment. Let's do a simple price delineation. Here, we have this guy having a breakup structure. If I were to look at this trade, now I'm not talking about time frame. Don't worry about time frame. It's just for you to see the model. It happens across any time frame. I will talk to you about time frame maybe in the subsequent videos, but then right here is for you to focus on what is happening. So look at this now from your own end. If you are looking at this, you will have a very interesting price action. You remember? You have P, you have E, you have D. Which of them should you take out? You should take out P. P is none of your business. So the only thing you will be focusing on for you to allow price to mature, price will reach its maturity level if it's dropped down below this guy, 50% of that price range. And now the conflict you will have here is that you will have so many areas your eyes will be fixed on. You have one, you have two. Two areas your eyes are fixed on. Be patient, I will show you. Area 1, area 2. And I hope you can actually see a bullish order block here too. This guy, a bullish order block. I hope you can see it. A bullish order block right there. So, for maturity, my eyes are here. Where your eyes are is where we call the point of interest. Most people call it point of interest. We have 2 points of interest, 1 and 2. All right, 1 and 2. So, now let's do the normal scenario of the uninformed trader. Uninformed trader will be, can't price come? I just want to be in this trade. Always in haste to be in the trade. But then, the disciplined and informed trader knows exactly what has happened. I learned this because I was tired of getting stopped out. Every time I come into the trade, I get stopped out. Every time I get stopped out. I said, what is happening? And let me tell you the truth. The market is always right. So if the mistake is elsewhere, then you are the problem. The mistake is from you, because the market is always right. All right. So you have no business doing anything at P until price is below E. That is at the D region. So our eyes are fixed. So let's see what happens. We are watching it. 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 Now, this is the predicament of the uninformed trader. If he has not taken this one, this entry here, first one, probably here. If he has not taken this one, yes, don't say you know this. Most people don't know this. They are taking the trade here, and maybe they are targeting somewhere. Now, they got stopped out the first time. All right? They got stopped out the first time, because you cannot be putting your stop loss here. It's not reasonable. It is not reasonable. Trust me, guys. The second one is going to be taking it after he got stopped out. Maybe the second entry is going to be here. I don't know who the person is, but I know somebody will be doing that. I know somebody will be doing that. And notice how price has not even traded into the region where our eyes are. Where our eyes are. And the guy is about to get stopped out for the second time. You see? Is that not the second time he's getting stopped out? He got stopped out consecutively twice. Consecutively twice. And it's supposed to teach you a lesson by now. Now price is at the eye level 2. Eye level 1. Now it is safer to take the trade here at eye level 1. But it is more safer to take the trade at eye level 2. Why? Because eye level 2 has a confluence. And confluence is always more powerful than just one trade entry. But then you must always look for a confirmation. Now, if you take your trade from eye level 1, it's not wrong. Mostly you take it from the consequent encroachment of the fair value gap, but your stop loss has to be below this low. All right? Below this low. Your stop loss has to be there. Below that low. And hopefully you target the draw on liquidity there. If you take this one, you're not wrong. But always consider the best. The best is always what you should do. You can consider the eye level 2 as your best, while this one is a good one, but then you can start by taking it from there. Eventually, you can start adjusting. But of course, do your money management correctly when you take it like that. So, eye level 1 will give you the entry. And of course, it will deliver to you see, it delivered to your target. Now, because there is eye level 2, which is the best, it has confluence of both a bullish order block and a fair value gap, it will be the best for me. Now, sometimes price may never come to it, but you know what it will do to you? It will help you to always take the best trade. Patience and discipline. And you're not suffering from FOMO, fear of missing out. All right? So, eye level 2 would be my best entry. Why? Because this one, liquidity 1, liquidity 2, all these ones have become liquidity. Those guys taking the trade quickly, taking the trade, liquidity, all of them have now become liquidity for the smart guys. All right. So eye level 2 now will play out. Let me show you how eye level 2 will play out. This is how I take most of my trade without any hesitation. Every time I take trade, that is what I do. So we are waiting for eye level 3. I mean eye level 2. All right. So you see, price is now reacting. See what price is doing now. Price quickly traded down toward eye level 2. Now, the moment price traded into your eye level 2, here comes the miracle. You will have to be patient and wait for price to slow down. You remember, if you have followed me, you know how I take my confirmatory entry. I will wait for a shifting structure and price gives me the best entry. And that is what I do most of the time. You now see it? Price, this is it. This is the best entry possible. This is the best entry possible. Remember eye level 2? Let me put it here again. A fair value gap, a confluence of a fair value gap and a bullish order block. Price traded into it, but now I am not just taking the trade haphazardly. Some people will just jump into it. The moment price comes here, and of course their stop losses are here below this low. Some people do that, but I don't want to do that. I always want to take the best trade. I am tired of losing money. Alright, I lost money until when I learned to do the right thing by force. So I have to do it rightly. So the moment price trades into my eye level, I need a confirmation, and that is always going to be this. Shifting structure. Shifting structure is powerful. Market structure shift. You will always see it. If you are part of my students, I will have shown you how these things work in the core of it. But then even as at now, you can still take good trades. So quickly, guys, I want to introduce you to FastBull.com. FastBull is an amazing platform. They offer several services. Most of the things here are free. Now, starting from their first product I want to introduce you to is the economic calendar. The economic calendar basically gives you almost every economic news data that you are expecting to watch out for. So if you come over to fastbull.com, come to product, you see economic calendar. They have several things here for you, and especially those of you who don't know how to check economic calendar, you can simply see them here, the actual data, the forecast, and the previous data, and the expected impact of that particular news. And they also have the 24-hour news here. The 24-hour news is basically going to give you an update of all the economic activities happening around the globe, and then you will stay careful of what is happening. Like what you're seeing here, BTC breaks through, everything you're looking for, it's almost there. Especially those of you who are dealing with the market, you have to pay attention to it. So you can check FastBull. The link is in the description of this video. Please go ahead and check it, and then visit the platform to check what's happening. So coming back to our chart, now that price is at my area of interest and the shifting structure is already here. Now it's time for me to make money. Here is how I take my entry. Because the first entry, of course, I told you some people do it aggressively, but I'm a conservative trader. I stay patient through all these mess. And now it's time for me to take the trade. Look at this. Can you see this fair value gap? This fair value gap. And right beside it, can you see a bullish mitigation block? Now this is a confluence, and if I take this type of trade, most of the time I am very confident. I don't know why, but most of the time I stay confident when I take this type of trades, and I don't hesitate to be in this type of trade whenever I see it, because I know the confirmation is there. Everything is perfectly given to me. So I take it here. You see this confluence, the bullish mitigation block, and my fair value gap. And my target is mostly, I will have to clear all the liquidity above here. Now, I don't have to fear anything, all the liquidity there. So those of you who are always getting stopped out, please learn this. I am tired of getting stopped out. That is why I have to learn to do the right thing. And this trade is like 1:2 or 1:2.5. So if you take this trade, you would be confident enough to be in the trade. You see? You see? Are you seeing what is happening? Perfectly. So that is it. You have to wait for it to mature before you can take the trade. Let me show you another example quickly before I end up this session. Alright, now the second example was a particular trade I personally took on GBP USD. Now look at this particular trade. Very powerful. Look at this. Can you see? You have this particular price action right here. And then you have, remember, your eye levels. Always don't forget your eye level. This is our eye level. And let me put eyes there. Then this one. We have a fair value gap. We have a bearish order block because the swing was from here to here. And we are bought in the premium area. And then what do? Now, this is something I use during the entry. I was watching this from the 4-hour. I dropped down to the 15-minute time frame to watch out for the retracement, which is this particular one. Now, after marking my eye levels here, my eyes were here. Look at this. If you look at this very carefully, you realize that this was in the discount area. This is the exact opposite of what I showed you on that. Remember, the price levels were from here, the swing point, to here. You can literally see that we are dealing with a discount area. This one, the people that were taking this one, discount. So the real thing was going to happen when price finally trade into the premium where our eyes level are. Because this is the premium, equilibrium, and discount. This time around, we take out D out of the equation. And we deal with what? We deal with P and E. Alright? So now that price is finally in the point of interest where our eye levels are, what do? We wait for confirmation, of course. Confirmation, guys. 2 ways to do it. Aggressively, or you can do it conservatively. Aggressively is that you take it immediately when price comes here, and then conservatively, you wait for a shift in market structure. And that's as simple as that. This is something I've taught you time and again. We have a higher high, higher low. Price is pushing now. We want to see a shift in structure. And this is it. A shift in market structure, guys. Here. Another thing to make it stronger, it came with a displacement here. Now, we are left with what? That becomes our bearish mitigation block. Now, some of you will be saying, why? But if you do this to this particular guy is also in a discount. Then you can, if you are patient, you can wait for price to come to the premium part of this particular range now that you have. There are a lot of checks you need to do to get the best trade. And that is one of the mistakes most people make. They don't wait for the check. Now, I can see a bearish order block right up here. Now, if price is not going to respect this one, that half of it is in the discount, then this could be a nice entry area here. All right, there. Or you can take the risk of taking it here, since this is the minor entry level or the micro entry level. But if you want to be more conservative, you want to reserve your money, is for you to respect your rules. Keep it here. And then that's in the premium. And where is your target? Your target is always the draw on liquidity. Now, if you have the draw on liquidity here, you will not have troubles. Trust me, you will not have troubles. So that is mostly how this type of trades work. You wait for price to actually mess up with a lot of people's emotion. You see? Now you are in the trade even when you allow price to go back up there. And you will watch out for price to play out. Let's see if we can see how it works. All right, let's see it. I am just watching it. Beautiful. That was exactly how it happened for me. Exactly how it happened for me. So that is the type of trade I take, and I don't have trouble. I'm confident. Sometimes I get stopped out, and sometimes I make more money than what I lose in a trade that I get stopped out. Thank you very much, guys, for watching. Make sure you give me a like, and there is a link in the description of this video. If you want to join my mentorship, you can pick it up. The link is in the description of this particular video. Is Early Traders Mentorship. See you right there, guys. Thank you very much for watching. See you next time.